As a business owner, one of the most critical aspects of running your company is understanding your costs. But not just any costs. I'm talking about avoidable costs. You might be wondering, what exactly are avoidable costs, and why should I care? Well, let's dive into that. Avoidable costs are expenses that you can reduce or eliminate by making different decisions. Think of them as the costs that don't have to be part of your business's DNA. For example, if you decide to outsource a specific task, that expense is avoidable because you could have chosen to do it in-house. Each dollar you spend on avoidable costs is a dollar that could have been reinvested into your business, whether for marketing, product development, or even employee bonuses. Now, let's talk about why understanding avoidable costs is crucial for your business's profitability. When you incur avoidable costs, you're not just reducing your net income, you're also limiting your ability to grow. Imagine you're spending too much on unnecessary travel or excessive overtime. That money could be better spent elsewhere, like developing a new product or enhancing your marketing strategy. The more avoidable costs you can identify and cut, the more resources you have to invest in areas that can drive your business forward. So, how do you determine which costs are avoidable? First, you need to analyze your cost structure. Break down your expenses into categories like labor, rent, utilities, and marketing. This will help you see where your money is going and identify potential areas for savings. Next, assess the value of each expense. Is that fancy coffee machine in the break room really adding value to your operations, or is it just a nice perk? Another important step is to consider alternatives. If you're spending a lot on a marketing campaign, could you achieve similar results with social media or email marketing at a fraction of the cost? Look for redundancies in your processes too. If multiple software applications are doing similar jobs, consolidating them can save you money on licensing fees. Once you've identified potential avoidable costs, it's time to measure the return on investment, ROI, for each expense. If you're pouring money into a project with little to no return, that's a clear signal that it might be time to cut your losses. Benchmarking against your competitors can also provide valuable insights. If you find that you're spending significantly more in certain areas, it might be time to reevaluate your strategies and look for ways to cut back. And don't forget to monitor your expenses regularly. Keeping an eye on your spending habits can help you spot trends and make adjustments before costs spiral out of control. Now, let's explore some strategies for actually reducing or eliminating these avoidable costs. One effective approach is implementing lean manufacturing principles. This methodology focuses on reducing waste and improving efficiency. By identifying activities that don't add value to your product, you can streamline your operations and save money. Technology and automation are also game changers. Automating repetitive tasks can free up your employees to focus on more strategic initiatives. From data entry to customer service, technology can help you save time and money. Plus, using automated inventory management systems can help you avoid overstocking, which is another source of avoidable costs. Conducting a thorough cost analysis is essential. This means taking a deep dive into every aspect of your business, from production to marketing, to identify where you're overspending. Once you have that information, you can develop targeted strategies to cut costs. Outsourcing non-core functions can also lead to significant savings. By handing off tasks like payroll or IT support to specialized providers, you can reduce costs and allow your team to focus on what they do best. But let's be clear, while it's essential to focus on avoiding unnecessary expenses, it's equally important to consider the potential downsides. If you cut costs too aggressively, you might inadvertently reduce the quality of your products or services, which can damage your reputation and customer trust. And if you cut employee benefits or wages, you risk decreasing morale and increasing turnover. It's all about balance. Yes, you want to be mindful of your expenses, but you also need to invest in your people and your products. A happy team is a productive one, and investing in your employees can lead to greater innovation and growth. Now, let's touch on some ethical considerations. Avoiding certain costs shouldn't come at the expense of your employees' well-being or the environment. Cutting wages or ignoring environmental regulations might save money in the short term, but the long-term consequences can be detrimental to your business and society. Transparency is key here. Make sure to communicate openly with your employees about any cost-cutting measures and ensure they understand the reasons behind your decisions. This can foster a culture of trust and collaboration, which ultimately leads to a more engaged and motivated workforce. Finally, let's address a common question. Are avoidable fixed costs relevant in a make or buy decision? Absolutely. If you're considering outsourcing a product or service, the avoidable fixed costs associated with producing that item in-house should factor into your decision. If those costs can be eliminated by outsourcing, then they become a critical part of your analysis. In conclusion, understanding avoidable costs is essential for any business owner looking to improve profitability. By identifying and reducing these costs, you can free up resources to invest in growth and innovation. Embrace technology, involve your team in the process, and always keep an eye on the balance between cost-cutting and maintaining quality and employee satisfaction. Remember, it's not just about avoiding costs, it's about making smart decisions that drive your business forward.